I just spent the past week on a sunny Greek island, and while I actually was there to also meet some clients, from a trading perspective, it was one of the better things I could do because there's really very little you can do here from an active investing perspective until now. And I actually think the Dow Jones Industrial Average is starting to get to a point now where it's very frothy, at least for the near term, and it's giving me some of the better reward to risk trades here. On the short side, I want to make this very quick and to the point. I'm not bearish in the market here, broadly speaking, just yet. But tactically speaking, I think there's a trade I'd like to share it with you guys. And more important than the trade itself is the process by which we get there. So let me show you the charts.
So before we look at the Dow Jones Industrial Average a little bit more specifically from a charting perspective, a lot's been made recently of the very low implied volatility environment in the broader market. And certainly I have talked about that plenty of times to my Clubhouse members and my advisory clients, and even here for the broader audience on YouTube. Typically what we tend to see when we see such a low implied volatility environment, it tends to be kind of how bull markets end. Now, let me just be very clear, I'm not a bear here, I'm much more of a realist. Bulls want, as long as the trends remain intact, we don't want to freak out and sell all our positions. But it typically is kind of how things start to peak out and kind of get to the point where they get as good as they're going to get. Keeping that in mind for right now, what I'm mostly focusing on is just a pure trade, but the process here is important to understand because, again, by most people have an indicator or something they look at to make their calls in the market. Very few people have a process, and ultimately it's the process that's going to allow you to actually keep your money when you make money. Because most people make money and then they lose it all again at some point, whether that's a day later, a week later, a month later, or a year later. Most people's trading operations are set up that way, in such a way that they have very little perspective. Let's have a look at the Dow, and I'm going to show you two specific charts here. I'm going to go right into our Clubhouse membership, where you can actually see the charts that I posted here as well. The first chart here basically just shows you bigger picture view, and is the Dow very much at the upper end of its range that it's been in for the past year and a half. If we zoom a little bit closer, you can see that each time that the Dow had been overbought at this level, and this is only one thing to look at, but it's interesting as well, the RSI, the Relative Strength Index, each time it reached these extremes of overbought, the Dow did actually consolidate or pull back some. It happened here. This was December 2016. It happened here again in February or March of this year. And it's quite likely to once again happen here again. We're not calling for a meltdown in the market, but we're calling for what I think would be a normalization or a mean reversion move. If we look at this a little bit more closely, on the more near-term charts, you get a very similar picture. Here you can see the stock, or in this case the ETF, the DIA ETF, trading quite significantly above both of these lines here, specifically that yellow line, which is 21-day moving average. Now, more important than all of this is the way this is taking place. You can see a very systematic move higher, very low implied volatility move higher, and ultimately another gap higher. This is one of the things I always talk to members about, and this is one of the core things I talk about in one of my courses as well, one of my popular courses. We teach people this whole phenomena of when steep charts go vertical, and I think that's exactly what's happening again in the Dow here. Doesn't mean the Dow is to fall apart here, but the odds of a continuation at this rate are very, very low. So by process of elimination, or at least by going through this process, you get to the point of finding really, truly high probability trades. We then throw in something like the proprietary scanners we have, the trend scanners, that allow us to see what is bullish and bearish in any time frame and when the changes happen. And we're still watching this very closely right now. Right now, still most things are near-term bullish and medium-term bullish, but we're starting to see underneath the surface some things start to get to such extremes that they might start slipping back into near-term bearish, and we're going to watch this very closely to see if other parts of the market are going to show up in the near-term bearish camp here at some point over the next few days, weeks, and maybe the next few months as this continues to play out. By the way, if anyone is interested, you can actually purchase the scanner. Just leave a comment down below, and we'll let you know where you can get that. That's it for this video. Take care.